Joining us, Samir Arora, of founder Helios Capital. Samir, hi, morning. How do
Morning.
you see this current market? And I saw your views on foreign investors. Are they still angry with India?
I don't know. I don't talk to them every day. But everybody is a little bit upset what to do. That is how when markets are down, people will remember. Yeah. But I have no new update on these things.
Mm, uh, we- uh, we've seen we are almost at the close of the earnings season. How are you looking at the earnings? Are they as per your expectation or in line? And there's no visibility of a good growth coming in FY27.
No, actually, the earnings in general have been better than one would have imagined, particularly if you say that 1 month of that quarter was the March month. But some of it may be because you have old inventory of various things which you are using, and B, because the government has not passed on all the costs. The oil prices have not gone up, interest rates have not been raised. So therefore, this quarter will not be as good. But the last quarter was quite good, and maybe the takeaway was that by the end of Feb or in March, the economy was recovering. You can see that in the revenue growth and all that. But then the macro this time has become the sort of a negative for now. The only thing we can say is that macro in theory is like a thing which can go away in a few months if there is some resolution. Right now, there is resolution, so we can't say. But on the other side, this incessant selling by foreigners, actually, if we take it that if there's a correction in other markets, then will we join them or will we then stand out? We hope at that time the fact that we did not participate in the bull market of AI and other things in the region and in the world, then at least at that time, although I don't like this label that we are an anti AI thing and we are supposed to wait for the world to correct before we do well, but that is what it is.
May not play out like that. But Samir, hi, morning. Do you think India equity markets specifically were a little too quick in recovering from the March lows? Because the headlines haven't changed. I mean, look at the rupee. Right now, we're at 96.20 to the dollar, and Brent is back at 111.
No, but then the world also assumed then that these things were getting over. And even President, if suppose you were inside President Trump's room and because I believe that he also believed, maybe not today, that this was a short war and that's why the US went in. So what better information could we have had than being inside, say, the US war room? And if I think they all really believed that, because it doesn't look that they wanted an open-ended war. So therefore, you can't blame anybody or the markets for what was the logical thing at that time. And even now, it doesn't look because if you see, US is downplaying even when Iran does something. They say this is below threshold of war. They are still trying, and it could end. But I'm saying ignore that for now and take it that it is 110 or $100 for oil. So what does that mean? I mean, we had $150 oil in 22, and unless you say it is for life, even that can be handled after some time. But if you say it for 6 months and India loses $30 billion on this account, let's say the oil used to be $65 and is now $100. So you're losing $35 per barrel and importing 5 million barrels a day. So you are spending 150, $175 million a day extra. So 1 month you are spending 5 billion, and for 6 months you are spending 30 billion extra, which is, you can say, sort of wasted. So what happened? The world doesn't end. India, just in the last rolling 1 year, would have made more than $30 billion on the gold that they bought 2, 3 years ago. And you're not supposed to make 40% in a reserve asset in a year. You're supposed to make dollar 4, 5%, I guess. So you made $40 billion extra in a year. It's all mental, it's all psychological. This is, we have had it so many times.
Oh,
But of
yeah,
course, India doing
absolutely.
badly is different. But I'm saying it doesn't end anything. After some time, the world will move on. Oil intensity has come down. We have taken it for some reason as if everything has to freeze because oil has gone up.
Samir,
Yeah. I think,
The
that
biggest thing
skepticism.
just before that, sorry, by Feb, our biggest export market was basically zero with a 50% tariff. So how much? Maybe we lost. I don't know. Let's say well, because I think exports to US are 80 billion. So you lost maybe 10, $15 billion of exports there. Now you can get that back and you lose here. I mean, these are day-to-day things which are bad for now. Totally agreed. But to think every morning, look at oil price every morning is not the answer.
I don't know what is then. We've been looking at Trump's tweets, rupee, oil, all of it. But Samir, tell me, have you at Helios been invested fully all through this volatility in the markets?
Yes, absolutely. And I tweeted yesterday, and it turned out that we are supposedly number one or number two.
Yeah.
Since our inception in nearly all our funds, which is mid cap fund, large and mid cap fund, and flexi cap fund, showing that sitting on cash, sitting in US, sitting on US currency, strengthening or weakening rupee relative to that did not help if you got the wrong stocks. In the US, the Nasdaq, the big six, four of those have underperformed the market and actually down. So just hiding in a wrong stock did not help. In India, also they were good enough sort of plus minus stocks to hang around, not to make great returns, unfortunately. But our thing is that at any point, some 150 stocks, we don't know which one, or some one third of the market is doing much better than market, and we are only trying to see how many of our stocks land up there. Uh, and it is a never-ending game. I've been playing it for 30 years.
Yeah, you've mastered it, haven't you? But tell me, how much cash levels are you're still sitting at?
I don't think there'll be any cash. Must be zero. I mean, zero means 1% or the daily flows in the mutual fund. I here don't get any daily flows. We have a monthly NAV. So in the long only that I manage for FII, it'll be 99.2% invested or something. That is the mandate. We have to beat the market. The rest is all storytelling.
Samir, how do you look at the Adani stocks? Adani Port is one of the top holdings for your flexi cap fund, if I'm not wrong. The recent news items which are coming with respect to settlement with the SEC and the DOJ cases. Now, does it bring in opportunity for foreign investors to look at Adani stocks?
100%. The thing is, we never really from Adani Port never sold it because we believe that asset is very good and even the man. But there were these issues with management not in my mind, but in the minds of mutual fund and in the minds of maybe even some foreign investors. And all of them have gone away. How we can say that from a big picture is that very recently it came out in the block trades that State Bank of India mutual fund bought. So let's say that gives an umbrella to the Indian mutual fund industry, who may not bother that what some smaller funds bought or but just because I think everybody liked the stocks, but they were all hesitant for all these reasons. And on the other side, Capital International bought nearly $1 billion. Now, Capital International is not the same as GQG, so that also gives a cover to these guys. So I would think that without knowing, I can just read the leaves. I don't talk every day to all these guys, but I can read that every day some new guy will use this and say that therefore it's not an issue, because nobody really knows how far to take these issues in terms of saying we'll never buy. They all just look at each other. We don't, so we bought it before.
And how do you look at infra stocks on the back of that? Do you see money now coming back to infra players now?
Infra players means give names, because normally we say we don't like infra players because there is too much of government dependence, but it depends. Like Adani is a different kind of infra player in the sense of airports having taken off, and if you need at least in the enterprise, and if you need all these new energy type things. So it depends. But if you call infra as somebody making a road, somebody making a bridge and all that, we don't need all that. We means we need as a country. I don't need as a stock.
But Samir, what about that
but
one
if you say
space?
airports as a infra, then we own GMR also. So it depends on what infra is too broad a term. We own L&T also that you can say infra. But infra has some bad areas and some okay areas and very few great areas.
Yeah, true, absolutely. But Samir, what about private banks? You've been very bullish on the space for a while now, but in the last 2 years, there's been significant underperformance. While they remain cheap, but especially after SBI's numbers, you're beginning to rethink that entire theory.
So, the thing is that we escaped IT, but we did not escape our number one holding, which is HDFC Bank. Uh, Now, in hindsight, we could have been more clinical about these things, but it is very, very cheap now relative to its history. And unlike IT, it is not getting disrupted and every day not having to reduce its numbers and not having to see what happens with the IPOs of Anthropics and OpenAI in the next few months. Till that time, there'll always be pressure because these two companies will have to justify why the IT of the old is changed. In at least banking and all, it's like in that sense a local this thing. But I think the real reason for the negative thing has been the foreign selling in these stocks. Actually, recently there was a good report from ICICI Securities, I guess, saying that how the top 10 for FII holding in the top 10 Indian stocks has fallen from 40% to 20%. It includes the IT guys, HDFC Bank, and the old HDFC and a few others. And otherwise, the FIIs have increased the number of stocks in which they hold a 1% plus position from 900 stocks to I think 12 or 1300 stocks. This I think is over the last 5 years. So what I mean is that in these large banks and including large IT maybe also, the FI selling has worsened the thing from whatever it was. In IT, I thought it was bad anyway and may have made it worse. And in banks, we thought it's okay and it has made it bad.
Samir, you've been a maverick when it comes to identifying some of the most undervalued stories. You identify Zomato when people were comparing it to tomato prices when it was 40 bucks. Anything in the March crash or correction that you've identified?
Well, now you can see most of our stocks because it's not I identify, we identify.
Yes,
But
you.
we have done many from Paytm at 500 to this one to delivery, many of them. But the point is, if you look at back to my favorite stock still, even though it's not our top holding, Eternal, if the stocks remain like this and the market remains like this, then the third guy wanting to go public cannot go public. So that itself is a self-correcting mechanism for the listed leader, that if the stock price does not go up or if the market does not go up and therefore stock price does not go up, how do you justify buying as a new guy when nobody's questioning the strength of Eternal? And nobody's saying that I can execute better, my product is better, my service is better, nothing. I am the next guy. And if the first guy doesn't do well, sorry, you cannot go public. So it's going to be okay according to me. But other new names you can see when you see the Indian list, because more or less what I buy here is only plus minus what they have there. At least they buy much more than what I buy, so you get a bigger universe there. The point is that we don't do anything which is over aggressive in the sense that 9% of the fund and 8% of the fund. When we talk so much about any one stock, and even including HDFC Bank, it'll be like 4-5% of our fund, but that is our top holding because we believe in the robustness of our model rather than finding one fluky idea.
Financial services, you have a stake of roughly around 36.5%. Do you think you're more bullish on financial services while HDFC Bank is not performing well in terms of returns at this point in time?
But at 36, that must be including the banks. I don't
Yes,
think you're
all
36.
financial services.
Yeah, all including. So the banks will be maybe 15, 18 or something. I don't know, 5 into 2, 3. So maybe 20% could be in the financial services where we now have MCX and BSC and a few others. But generally, we were a bit confused and still are a bit confused about the broking guys because we believe that the system that is SEBI plus Ministry of Finance plus maybe RBI all are against the high volume of speculation, although you may say BSE also will be affected. But in general, they are against this high volume, and therefore I thought and we think that they will continue to put pressure on volumes.
Samir, you've always described the long term in the current world as a series of short terms. What is this next lap of short term looking like? Purely about India. How much index return can one expect?
So next, this thing I mean by that, when we say in that context, we say 2-3 years. So what we mean by that is that you can analyze the company and the current management and the environment and interest rates and the current government and preferences of market for different sectors for the next few years. I believe that there is no long term that anybody can predict, and many fund managers say that we look into the eyes of the promoter and we bet on jockey and not on the horse. And according to me and according to us, the promoters themselves don't know that how good or bad they will turn out to be. And I could do a 1 hour lecture on 100 examples where promoters didn't know. So we say next 2-3 years. Now looking at India in aggregate for 2-3 years or even less broadly, please note that if the world has $100 to be invested in emerging markets, India's weight is 12%, which used to be 19. And you may say that we want to invest in Samsung Electronics and TSMC, and India does not have those companies. But basically, these two, or if you include SK Hynix and you add 20 more, their entire weight will be 40-50%. The whole of Korea, Taiwan is about 50, let's say 40 is all these guys. So the world has enough capacity to make that 40 into 50 if they so wish. By only buying these things in Korea, Taiwan, they can make it 60 if they so want. And there is still 40 left. So we should not be in a situation where we are having negative flows. We may get less positive flows. Instead of 12%, put only 5% in India or 2% in India. But we are accepting it that our negative flows are okay because the world has AI and we don't have. So my quick summary is there are 5 reasons, let's say, for India doing badly. Currency is weak. Our tax rates are very different. They are not normal. We don't have AI. Let us say something else also, that interest rate is low, high. Now, we should not treat it that we will not do anything on one of these factors because, that's not the only factor. Arey bhai, we should say these are the 4 factors. In these 4 factors, there are 10 sub-factors that we can do. Don't think that why should I worry about why should I worry about tax rate? Because, AI is the issue. How can I worry about AI? Because, currency is the issue. Because there will always be 10 issues. So as a market, as a government, as us, not to take it that we will do nothing about any of the factors because there are many factors. But end sum is that you will still make, you do what you want in rupee terms, mostly you will make plus minus earnings growth over time, and that earnings growth is more than 10%. It would have been 15-16% before March, and let's say top down it reduces by 2-3%. You will get 10-12%. It's not bad for now in a situation like this. I hope definitely annualized you will. I mean, if not in 1 year.
Good to hear that. Some relief that time in the market will eventually reward you and not timing it quite perfectly because no one can. But Samir Arora, great to have you on the show as always. Thanks for your time.
Thank you.